Johnny, over the last 20 years, inflation's been rather subdued. Is this historically the norm? What are your actual thoughts about it going forward?
Well, it's interesting. We've seen two substantial bouts of inflation. One was after World War One, and in the Weimar Republic, when the Germans were printing huge amounts of money, and we saw massive amounts of inflation and all sorts of economic challenges. And then we obviously saw the 70s oil price when inflation shot up, and that caused interest rates to rise substantially, and we saw the markets and the economy actually fall substantially. But if you actually look longer term, and I'm talking about going back 4, 5, 6, 700 years, we find inflation has been very, very muted up until around about 1550, 1580, when the Spanish actually started bringing huge amounts of gold from Latin America and then using that gold to buy up assets in Europe. And that was really the first time we saw a substantial spike of inflation. So there was a lot of money chasing too fewer goods. So apart from sort of one or two other sort of periods, we're now in a situation, as you say, the last 20 years, we've seen inflation being fairly modest. But the trouble is that given the huge amounts of money that have been pumped into world economies, one has to question, are we going to see these subdued rates of inflation continue? And particularly against the backdrop of the very, very strong deflationary pressures from outsourcing, particularly to Asia. Has that now run its course? And therefore we'll see prices rising as wages are rising, and potentially interest rates rising as we see inflationary pressures coming through from people wanting a higher return on their bonds and property and other types of investments.